Good morning, good evening, good afternoon. I don't know what time it is that you are watching this. I don't even know what day it is that you're watching this. But this is being recorded at 7:51 a.m. Eastern Time, June the 4th, Sunday. So, advance happy Father's Day for all of those that it applies to. But I'm going to start you off pretty quickly here with a very short happy and pissed off and honestly fucking don't care little rant. Uh, because I've been doing this for 11 years, this online trade share, call it. And I have seen cycles come and cycles go constantly, but the audience remains the same. And when I notice the audience that starts to go out there and bitch and complain and fuck this shit, that's when I know we're at a turning point. That confirms that we're at a turning point. This is your S&P for the year, and I just want you to see what you see. Everybody in the world can see this online. We're not going to waste much time on this. Today, being Sunday and advance Father's Day, this is the forecast for tomorrow where I'm at, 91. But the real feel is 109, and this is with humidity. The real feel in the shade is 103. Now I'm going to try and keep my composure here as best I can. I'm a grown fucking man. But today, my 14-year-old went to the movies yesterday with her friends. Went to the mall, and when she came home late last night, she says, "I didn't see the movie." I'm saying, "Why not?" They went to go see Disney's Ariel, and she said, "In front of me was a little girl, and it was her birthday, 5 years old." And she wanted to see the movie, but her parents, her mom, not her parents, single mom, couldn't afford for her to go see the movie. So she bought the ticket and gave it to her girl and told her, her friends would watch her in the movie and buy her popcorn and everything else. And she would just, hang out and wait until the movie was done. And I was so proud of her doing that on her own. Today, we did the same thing because, again, 109 degrees, 103 in the shade. So woke up this morning, text all my guys, let's go, let's get the vans going, let's go start doing the circle. And we went around and we rounded up 117 street kids. Normal ones that we always go to every first Saturday of every month. We always go over and make all of our initial monthly commitments for our donations that we're going to be doing because we try and keep these kids off the street, especially when it's 103 in the shade. Make sure they're hydrated, make sure they got food. That's where the membership fees go to. And the reason the membership fees are what they are is that membership fee for a month is the same amount of money that a Filipino construction worker makes for a month. He will be out there on scaffolds, without scaffolds, with shovels, with t-shirts around their head, trying to keep their face in the shade, and they will make $197 a month. That rice that you eat that you love so much and you enjoy, those people that are planting and picking the rice, they make half of that amount for a month. Just under $100 for a month. Now, it's not your responsibility. It's not. Your parents fucked in the right place so that you could be born in a place that you didn't have to go through this. These kids didn't have that choice. That's the reason I make the commitment I do. And while educating, granted, I used to be a CPA. I had to go to college for 4 years, pay $100,000 for it. The education that you acquire, asking questions, being active, taking advantage of the one-on-ones, using the message, the Slack room for what it is, and asking and being active. That's the education and experience from 28 years now that I can share. $100 a month while you're eating your rice. So again, I will put smiles on these kids' faces. I will. With or without you. Don't fucking need it. But you, that plethora of confirmations that I got this weekend because we got a blow off top, you will never be allowed back in my club. Never. So, as we go forward here on a positive note, talking about only the SPX, all we're going to talk about today is the SPX, with everybody knowing for the last 8 weeks that we've been discussing, everything is inside the QQQ. Everything. What we're going to do is we're going to go over the SPX today, and all during the course of the week, we're going to focus on the QQQ with a mention of the SPX. That's the way it's going to go. You just had your third green week. Threes are magic number. Now, depending on where you are in your wave, as your waves are counting and continuing, and your breath and your momentum and all of your other factors, 3 is your big warning signal as far as where you are. Now, we closed green on Friday and green on Thursday. So there is your 2 back-to-back green closes where you can go back as far as you want, all the way back to the beginning of October. 2 is your magic number. 3 is your big warning. 4 is your go big, go heavy. We finished the week up 55.66 points. We filled the final gap that we've been discussing for a little bit longer than 2.5 months that had been hanging up there and dangling at that 42.64, 42.83. Filled it, filled that other one at 4,200, which had been dangling up there for the same period from back in August. 3 green weeks. Bang, bang, bang. 3 green weeks in a row. Last week being basically a doji. Come over onto your big monster, and your QQQ finished up 6 weeks in a row. Call it 10 out of the last 12 weeks, because the 1 week, first week of April, barely closed down a point. The third week of April, OPEX barely closed down 1.5 points. And this is when AI began. AI began right here in the middle of April, where we had confirmed sell signals on every one of the indexes. And then they started coming out with AI. And now here we are. 5 of the last 6 trading sessions reached greater than 1% increase from the prior day's close. So if you don't know what a blow off top is, I will bring you back and show you an image of what a blow off top throw over is. And that's essentially what we're looking at from an Elliot Wave's view. You have your 1, 2, your 3, 4, and then your very, very complex wave 5. Count your waves, 1, 2, 3, 4, 5. And you either hit your ridge and you throw down, or you have your throw over and you have a more accelerated throwdown, as we had back in February. So again, bringing you back here only to the weekly count, you have 3 green weeks. 3. Use it to your advantage. I will be messaging about it and explaining how it is to your advantage. So moving on, this is the detailed SPX that I work off. And all of these big red highlighted bars are gaps that are unfilled. Up above, there's nothing. There's nothing there. There is a gap, and it is so fucking far away, there is absolutely no reason to even mention it until we complete where we're going. So I'm going to zoom this in a little bit just so that everybody can get a chance to see. And you see here, you had your plus 7%, minus 3%, plus 12%, minus 5%. All the percentages are counted, and they're counted for specific reasons. This is as we went into December. And again, as we went into December, which was the last time I had the bitch and cry and moan confirmation, I was calling for the Santa rally back here in early week of December, as of Christmas week, that we would be getting into a Santa rally. We came down and put that low in on December 22nd. And because we did not get any movement during that week after Christmas, the bitching and complaining and crying and moaning and, oh, fuck this shit, all started. And all the cancellations began from the fucking Dougie Alabamas. And look at what you got coming off of that move. So I emphasize my confirmation as to where we are right now. And again, counting our percentages is all that I'm trying to display here. I want to bring this in here to where our last movement is, which is coming off that 40.48. You had that 3.3% drop, 4% run, 2.5% drop, another run. I didn't calculate this. I apologize. 1.5% dip, and then this most recent 4.5% move, which filled all the gaps up above. What you see here is you see your dips are getting shallower, shallower, and shallower, which again emphasizes as you start coming into how you start to look when you are finishing off a wave 5. So, looking at what we've got and only looking here on a 30-day, which is only looking as to what we're working with from that first gap way down here in May, moving forward into the other gap from a week ago, and then the one that we got there on Thursday. So these are your gaps that we're working with, and that's all that we're discussing for the moment until we start to see some further confirmation, as right now all we are doing is forecasting for that confirmation. This is our Elliot Wave. And I've gone through, I shared with you last week, we've got a bullish, we've got a bearish. And I'm sticking with the bullish until there's a reason not to be. Although this in and of itself, 12 green weeks, call it 12, 10 out of the last 12, 5 of the last 6 plus 1%. What a throw over looks like. Your heat map, where are we? For the year. And we'll even emphasize it a little bit more looking at the futures over here from Friday. Right here, right around 10 o'clock in the morning, the Dow went green on the year. Right around the same time, the Russell 2000 went green on the year. And as you see over here in the second column, the NASDAQ futures, they were completely dead for the duration of the trading session on Friday. Totally dead. Absolutely no movement whatsoever. Almost went red. Were almost less than 2 points from going red early in the morning when we had that first initial dip. Your RSIs, obviously extremely overbought over on the Dow, over on the Russell. So again, we are into June. These just went green for a moment during the course of the day on Friday, and they are extremely overbought. So it doesn't take a fucking rocket scientist to start to consider, if the Dow and the Russell are that fucking weak and the NASDAQ is so full of shit, maybe the full moon happening here on June the 3rd and the way everything kind of counts out, it might just fucking be the time. Going into what we're looking at here with that throw over, I'm looking over at the Dow futures, and the Dow futures right now are showing minus 34 points. So it basically means we're opening flat. So this is where some of you might get lost. Some of you might be very easy to follow. So I'm going to go really slow with this. Hang on. So this is the Elliott Wave view that we have coming off of the October lows. So for this particular move right here, which is our wave 1, okay, we're looking at the 1-2, happening here in the very early stage of October. Show you here. Let me pull this out so we're looking at the same time frame. 90, 180, and I'm going to stick with the 4 hour so that you see. So here, this is the 1-2. 7% move, 3% down. All right, that's our 1-2. And as you can see here, the 3 did not make it here on this initial move. And then we did almost appear at the time as if this was going to be an ABC move and a move to the downside. However, many of you that have been with me for years, many of you that have been with me since last year, remember back here on October 17th, the emails were going out saying we are extremely bullish and we are looking for 4,100, 4,200 going into the end of 2022. So this eventually became our wave 3, which is pretty perfect because we came right to the 161 extension over on that drawing. Then you had a very deep wave 4. This was December. This was the No Santa Claus rally that we had. This came right down to that wave 1 top, almost negating it as we had a big ABC with that FOMC spike over here, which came to 4,196. I was saying 4,100, 4,200. We only got 4,196 into the end of 2022. And then we finished off with the only thing that works is an ABC for that 5th wave. And we finished off our wave 1, which went into our February 2 high, the day after the FOMC meeting. So we'll zoom out so we can zoom in. Now, as we went into our decline, which, like I've shared here with the June 30th SPY and QQQ puts, over here in February, you look through your emails, you see that there was the issued on the March 10 SPY 410 puts. Having closed out on the dip here, because everybody was getting so frantic, we only wound up getting 300% on the trade. The bounce, then the wave 3 decline, the wave 4 bounce, and then the final finale into what finished on March 13th at 38.08, holding those 410 puts into March 10th. They were $25 fucking dollars. So I've spoken to a lot of you guys about what to do, how to manage, how to position on these SPY or QQQs going into June 30th. And it's very clear to see that you don't need to have 100 of them. You don't need to have 50 of them. You don't need to have 20 of them. If you have a portfolio that can handle something like that, it's very much to your advantage considering where we are. So this being our March 8th bottom, March 13th bottom, I will zoom you out to get you up there to where we were, because this being Christmas and the No Santa Claus rally, Tim, you suck, you're fucking horrible. And then January 6, January 7 comes around and you finally start getting your move. And where do we wind up? We wind up here at 41.95.44. 1 month later than the end of the year, having expected to get to 4,200, 4,100 as we went into the end of 2023. So that's your February high, and then here you start to see your declines. You see your 3%, then your smaller bounce, then your wider drop, 6%, then your smaller bounce, 3.8, a little bit greater than here, but still much smaller, and then your final decline, which took us for a 9.21% correction over the course of 5 weeks. Since this 38.08, that's what we're going to go into right now. So for that, I can zoom out into a 90-day and go on to the 1 hour, so it's a lot cleaner to see. So here's our 38.08, and here's where we are. So this being the wave 1, wave 2, I've looked at this 100 different fucking waves. I can't. I can't. Having seen a 1, 2, 3, 4, 5, I can't go over here and say that this up here was our wave 1 and this down here was our wave 2. I can't do it. There are people out there that are doing it. I can't do it. I can't see the math coming in this area here, how this can be not be the 1, 2, 3, 4, 5. I've eliminated the drawing just to make it simpler for what we're doing. I can't see it. So wave 1, 231 points up. Wave 2, 130 points down. Wave 3, 260 points up, greater than wave 1. Wave 4, very complex ABC, 121 points down. Fits very well. A little bit smaller than what wave 2 was. This is your 40-48. So now we will move into our 40-48 and then we'll zoom back out in a minute. So here is our 40-48. Didn't need to do that. 30-day, 30-day. Here's our 40-48. This is where we began. There was a 3% decline, a 4% run after having chopped, using that 41.55 to absolutely fucking bankroll when doing the spreads all throughout the beginning initial part of May. Then we had our spike up. And our spike up, understanding, wasn't expected. Bad news all over the place. NVIDIA reports. Nobody gives a shit about anything, even though all of NVIDIA's fucking products are made in Taiwan. That's the reason why the China-Taiwan thing is a big fucking deal. Here you are up here, 4%. 2% decline, how we came down below that 41.55 again, and we only held that problem area, which we have spoken about over and over and over and over and over, about that 4100, having gone way, way back into the middle of April. Supported on it, boom, got your bounce. And you can see here how your movement is. 4.5% move off of that visit that we had early last week at the end of the month, down to 41.66. 2 days. 2 days, 4.5%. Excuse me. So you've got your June 1, your May 26, your May 24, your May 4 gaps. That's it. Now coming over here onto a wave point of view, with that being wave 4, A, B, C, call it, for this first wave, 165 points. Again, only what looks best as a gap down, fills for B, 109 points, holding that 4100 level. And then an A, B, C for what we're looking here, for what looks best as a wave 5 completed, being 242 points to the upside. So zooming out again, counting as to where we are, 231 points on the wave 1, 260 on the wave 3. Wave 3 cannot be smaller than any other wave. It is the longest wave, 260 points. We're at 242. So thus, 4290 plus 18. So you do the math on that. It's pretty simple to do. 4308. 4308, we cannot break above. We break above that, this drawing is complete garbage. Complete garbage in every aspect of the world. And there's absolutely no way to go out there and decipher a true 1, 2, 3. There's no way out there. It's just it doesn't exist. So now coming back, looking at our 1, 2, the 100 extension, 4139.79. Broke it. The 161 extension, 4282.32. Right where we came to, right where our unfilled gap from last year, August, was at. Zoom out here into what we're looking at as either this is an AB with the 100 being right there perfectly at 42.05, or this is a wider AB with the 100 being right there at the gap bottom that we filled on Friday at 42.68. Either way you look at it, you see the two lines that correlate or coincide with each other. 4270, 4268, it starts giving you more attention, saying, yes, this is significant. This is very highly likely where our target is. You come out here and you look at the 4282, how that also coincides to where we're at, and you start saying, yes, this makes significance. This starts to coincide with where everything is. So if you wanted to say, Tim, you got no fucking idea what you're talking about. We're going up to 4373. We've discussed 4373 and 4375 on multiple occasions. I cannot find where you can call this wave 4 an 1-2. Okay, we're calling it a 1-2 right now. And then you're going to come over here and say, okay, this is R3. And R4 should only be a shallow dip down here just to maybe barely fill that gap at 4230. And then we're going up to wave 5, which should take us up here into the 4370s. That would negate this being 242 points, going out to where we were on the other points of it being a 1, 2, 3, looking very clean as to where we are. So then we start to move out to, okay, where in the hell are we? Well, this is where we're at. Looking at the wider point of view, looking at our 400-day, our 50-day, our 200-day, everything in there, all right? We're just looking here on a daily. We had a 609-point move on the initial move up into December off of the October low, 335-point drop. Math isn't hard to do. A 430-point move as we went up there into February, and then a 349-point drop. Again, math isn't hard to do. And then you come out here to where we are now on this elongated 3808 up to where we're at, 482-point move. And again, there are a plethora of ways that you could turn around and look at this. You could be looking at this as the 1-2, this being, from a bullish point of view, I'm looking at this as being wave 1. What some people are talking about is wave 1 completed here. This was wave 2 down here on the wave 4, that tiny little decline. So to entertain them, I'd like to do it now, is that this was your wave 1, this was your 1, and this was your 2. All right. So we'll entertain them. We're not gonna make sure that it's exact or anything like that, because what we're doing here is entertaining and making sure that everybody sees the same thing. So now we zoom up, and you're going to see where your minimum wave 3 comes out to 4420. So that means this cannot stop until we start getting up to 4420, meaning to say that this is your 1-2, and now you are going into your big wave 3. And your big wave 3, again, coming off of that red drawing, is looking here, having taken out 1, now going up to 2, up at 4330, and then going up to 4443. So then you start to come into, where are we with our 3 weeks? Where are we with our percentage counts, with our gaps? What's our remaining gaps? And then you come over into your Big Daddy. And you can do whatever you want to do with your Big Daddy. That's completely up to you. Your Big Daddy is right there. There's your full moon. Here's your move. I'm pretty sure that's accurate, 21% from the October lows. Here's your full moons on the way down. And then somebody turns around and says, yeah, but that's looking only at the down play. Okay. So here's your full moons. Let's go back 4 years. So I think I've got them drawn a little bit further than that. Yeah. Here's your full moons going back to the beginning of 2020. Here's your other full moon, came on February 19th. Just so happened to be that we topped on February 20th. You had your full moon in the middle here on the way down. Had your full moon right after wave 1, wave 2, and then your wave 3. And as you can see here, your full moons. Here's your full moons. See your moves that are coming off your full moons. So use your full moon for what you want to do. It's completely up to you. One thing I will assure you is trading is not as difficult as you want to make it. Looking back here at December, the guys that were in calls, only trading calls, didn't get the move over there in December. Didn't get it. Trading over on the spreads, numbers don't fucking lie. We were banking on the puts using that incredible fucking 3,800, 3,795 area. Come on down into January, all the way through, selling calls, sometimes selling puts, selling calls, selling calls, selling calls. February, as we started to decline a little bit more aggressively, we had a nice VIX. We were selling a lot of puts, making good money. Trades of the week, 300, 60, 150, going all through March and April. Absolutely fucking bankrolling consistently. Selling calls. Got into some puts on a couple times when we had those little drops. Worked out. Going through May, again, same thing. And then you get your blow off, and the mismanagement or lack of management or lack of, hey, Tim, can you help me out with how do you roll a trade properly? And how I explain how to back into that calculation initially, knowing that you go into the trade thinking, if I need to roll this 5 times, how many contracts can I start with? I will continue to do what I'm here to do. I will continue to do it. I would love for you guys to be here for the ride. I would love for everybody to make the kind of money that I've made over the last 26 years. If you want to microwave it and social media and make it TikTok-y that you have to make it now, I can only say I'm doing 70 hours a week. Saturdays and Sundays as well. One-on-one calls, I can only do one at a time, and I do try and fit everybody in. So all this week, I will do them all during the course of the week, from just after the opening bell when we settle down until we get down into around lunchtime, middle of the day. I'm going to leave you with 2 clips. The one from Sem Karsan, you really need to fucking think about. The bond market, nobody has wanted to buy because the U.S. went and played a fucking Uno card and showed the entire world their hand that were weak-ass pussies and needed to go to the very end of the fucking day to get a debt ceiling deal on debt that we're completely exposing to the fucking world that is way above our GDP. The bond market is going to have a fucking rally like you have never seen. And where do you think that money's going to come from? Enjoy your weekend, everybody. I love you all. I love you all equally. Some of you I love a lot more. Glacier people, you will not believe what's coming your way.
Hey, Jim, what's going on?
Hey, Rick, how you doing?
All right, so what did you think about today's numbers? If you had to highlight what you thought were the most important features for our viewers and listeners.
Some people may call it a soft landing. I call it stagflation, right? At the end of the day, the Fed's in a box. They got a tough situation here that's bad for liquidity. That's overarching over the top, right? But in the meantime, markets, people are short. You got a little bit of a vol squeeze going on. You're going into a June OPEX, which is very important. There's a lot of open interest in those puts that drives all this buyback. For the next week and a half, people know that those flows are coming.
You said the magic word, liquidity. And I know in my house, when the liquidity gets bad in the kitchen sink, we get Drano, okay? Well, I think Janet Yellen's going to have a Drano issue because many see as much as 1 to 1.6 trillion in bill issuance coming. And right next week alone, 100 billion in bills for cash management, 123 billion for 3 and 6. You have 4 and 8 week bills, what, about 100 billion. You're looking at close to 300 plus billion, but of course not all of that is new. But where is it going to come from?
Draining the TGA at the end of the day is borrowing from the future. That's what we did. We pushed a bunch of liquidity into the system. It counteracted QT. But guess what? QT is still happening, and now those flows have to flow out the other way. 1.4, 1.6 trillion coming out. That's direct, out of the veins of the market.
Oh, yeah.
And that's
it could come out of banks. It could come out of the reverse repo market.
Correct.
Could come out of the money markets. But you're right. No matter where it comes from, the issue is the same. We need to replenish the Treasury General account, and we all know it's coming.
It's coming. In the meantime, shorts are going to get squeezed. A lot of the time, the way these things end is with a blow-off top.
Excellent. Real quickly, the VIX. Can you give us any enlightenment on the VIX? It certainly doesn't seem like it's going to be ramping up anytime soon.
So because of skew in the markets, as you slide higher, you naturally slide to a lower vol. What we're seeing is actually, even though you're seeing the VIX coming down, vol underneath of these strikes is going up. And when you start to see market up, fixed strike, vol up, which is what we're seeing, it's a time to be cautious.
Awesome. Chem, have a great weekend.